Hey guys, Mark here, and I'm going to be showing you a profitable strategy you could use to trade. And this strategy can be used on NADEX, Forex, anything with charts really, even crypto, stocks, options, whatever it is you want. Now, I'm going to show you example. For this example, I'll use, let me think, okay, really quick, we'll use Euro GBP. Reason why we use Euro GBP is because this currency, sorry, I was gonna say stock, but it either trends a lot or um, it ranges a lot. Before we get started, I just want to say Happy New Year. I didn't upload. I meant to upload 2 weeks ago on New Year's and give you some type of video, but I didn't get to it, and I apologize. And last thing, quick disclaimer: I am not a financial advisor. Everything you will listen to in this video is my opinion only and for educational purposes only. Do not, I repeat, do not risk money you're not willing to lose, because trading can be very risky and you could lose everything. So just with that being said, be careful and do your own research. So let's get to the chart. Regardless how you feel about what moves the money, whether it's algorithms, smart money, institutions, banks, we're not gonna talk about that because there's many videos that talk about what moves the money and why the money moves. We're just gonna focus straight on charts and how money moves. Okay? Now, I have this on 15 minutes. Okay? And to save time, we're only gonna focus on 15 minutes. I'm not gonna be switching time frames to confuse you. We're gonna stick to 15 minutes only. Of course, you should be using a top-down analysis pattern so that you know where the market is most likely to go. But right here, what I'm going to be showing you guys is not complicated, and not many traders trade with it, and that's structure. Okay, how markets shift between uptrends and downtrends, and where money is going to be primed to reverse or have a pullback. Okay, I will show you how to do that, and you could look back at yourself and review the charts. You can be, and you'll find out you can be profitable with just trading what I'm about to show you. Okay, and lastly, I'll leave my Telegram in the link, or not in the link, but in the description, so that you can contact me, and I challenge you to do this yourself. This is going to be totally free. No payment for this. This video is yours. I'm going to give you everything you need to know to start being profitable trading, and you can add your own inclusions, or you can contact me for a one-on-one or something and we can discuss some type of training. But otherwise, this video is going to have everything you need to be able to trade profitably. You will lose, but you'll be able to trade profitably with just this method. And I challenge you to do it after this video. So let's get started. The very first thing I want you to look at, we'll look at when market shifts right here. When market shifts right here, you see a big downtrend, it reverses up, goes back down. When market shifted here, you saw uptrend, went up, went down, came back up. This is known as, creating higher highs, higher lows, and lower highs, lower lows. Okay? That's all you really need to know. Higher highs, lower lows, higher highs, whatever it is. Okay? Now, here's what I want you to pay attention to. Right here, when market shifted down, okay? If you draw your Fibonacci, and I know a lot of people don't like trading Fibonacci, and that's fine because they don't know how to trade with it. Many people don't understand how to use it. Okay, they would rather use trend lines like this and then take it on the break, which, yes, it could have worked on the break, but how much are you taking it? What's your take profit? You also need to know risk management, and this method I'm teaching you right here has all that information: your risk, your take profit, everything. So the very first thing you look at is the last shift in market. Okay, and we could say right here was the last shift. Okay, it started going down. Next thing you need to know is your golden zones on your Fibonacci. Okay, if I mark this from high to low, you will see the three levels you need to know is 50, 68, and 80. Okay, you will know that the market is too strong if the market does not reverse until the actual 50, When the market doesn't reverse until the actual 50, then you know it's a strong downtrend. Okay? And on a higher time frame, what this is going to look like, if many of you are aware with supply and demand, you will notice this is a drop base drop. Okay? So what happens in a drop base drop? Market ends up coming to the drop base drop and then reverses right here. It came up to the drop base drop in this area and then reverses, but we're not talking about supply and demand in this video. Okay? Pay attention to this. So it reversed at the 50%, barely touched it, and then reversed. When smart money or institutions are trading, okay, they're not going to be selling down here in the bottom half of the 50%. What they want is they want discounted levels. They want to sell when market goes so far up above the 50 that people think that this is a buy, that the market shifted. So like if this kept going up right here, many traders will think that this is now a buy and it's going to break this high, and then what happens is that's when the algorithms and smart money kicks in and then sells. However, this did not happen here because it shifted before the 50, so this is a very strong downtrend. And this right here tells me that this was not any type of pullback. There was no manipulation here because this was just simply taking profits and then some traders going back and sells right here and taking profits until it shot down again. Okay, because this is the take profit area. The bottom 50 is when people want to start taking profit. The top 50 is when people want to sell for a discount. And obviously it's the opposite for buys. Okay, in this example, this is just a sell example. So here's what we want to look at. Let me delete this really quick. Here's the strategy. So as you see, market was shifting down, and this shift right here was based off this first initial move. So we're just still looking until we see a break of this low. Okay, because this was the low that was created from this big shift down, we want to see a break of this low here, and we see it right here. Once this break happened, what we want now is the last high that created that break. Okay, and we want to mark that from low, high to low right here. And look what happens here. Okay, we see price went up to the 68 and 78. So this should be 78. I use 80 to round it off, and you could round this off to 70 instead of 68, but you could keep it default. Whatever it is you want, you could do whatever it is you want. As you could see right here, price shifted back up into discount area, and look what happens when price shifted into discount area. Went back down, and this is your take profit. So because this is a NADEX video, I'm going to be showing you guys what it is you would do. So on NADEX, okay, when price gets up here, so in this first green candle right here, this was at 10:30 in the morning. Okay, New York session. So New York session, that's very good. Everybody's usually up and trading at New York session. You would take a trade with the strike being your take profit because you're going to take an OTM trade. Now, essentially, you could take an in the money trade right here. The strike could be up here or at the 80. Okay, and your take profit just has to be when price gets down here, you exit the trade. So on NADEX, what you could do, there's two things you could do. Your first strike could be at the 68 or 70 level, whatever it is you're using. Not your first strike, your first entry. And your strike can either be the in the money that's at anywhere around the top, okay, the high, or anywhere around above the 80%. So you could take your strikes here and here, and your obviously you'll take profit when price first touches the 0 level. Or if you're taking OTM trades, your strike should be at this 0 line, wherever this 0 line is, okay, and your entry should be right here. And this is a 24-hour trade, so you entered at 10:30, right? obviously you entered at 10:30 candle, so your expiry should be the next day's 10 a.m. In this case, NADEX doesn't have that. Your next day's and closest expiry would be the 8 a.m. And as you could see, we took this on the 10th, right? By 2 a.m., your trade was already out. You know, by 4 a.m., 5 a.m., you would have already been out of this trade. Now, your OTM, if you took the OTM strike right here, you probably paid around $10 because when you entered right here, this strike was probably $10 because it had a very, very slim chance of winning, right? When it came down here, your strike is now like $50 at the money. You know, you're getting at the money strikes, maybe $60, $70 here. So you risked $10 and you made $40. That's a 1 to 4 with your OTM strikes. With your in the money strikes, with strike being so close to expiry, this right here, you're probably in the 90s already, you know. So if you took a strike at $68, $70, $75, you already made your full profit here. Now remember, in the money strikes, you're risking more than you're making. But with the OTM, you probably made a 1 to 4 right here. You risk $10, you probably made $40, $30, $60, whatever it is, because we don't exactly know. Anyway, next move. So we don't stop there. We know that structure is still down because this was never broken and created a new low. Okay, and then now it created a new high and a new low. So now we draw the new fib right here. And you're not going to win every time, trust me. Right here. This is where you would think you should put it, right? You don't put it here. You actually put it at the first candle that broke the low. What did I just teach you? You see, I tricked you there. I made you think that this is the low right here. But remember what I was just talking about. You could just reverse. I told you the low is the first candle that breaks the previous one, okay? Right here. So this is the new low. And look what price did. Came down to the low. It went down further, but this is not a new high, okay? This is not a new higher high. This is still the high, okay? So what you want is price to come back, touch the 68 level right here, or the 80, or the 78, whatever it is you're using, and look what happens here. You take this trade, okay? Now, this was at 7 a.m., so not quite New York, but look what happened in New York. Session right here, 8 a.m., 8:30, 8:45, it was up here. So you do the same thing. You either take an in the money strike that's up here or above the 80 and you take profit, you exit the trade when it hits past the 0, or you take an OTM strike that's down here and you wait for price to come down. And look what happened. Price came down. Now if you're trading Forex, obviously you're entering right here. Let me see right here. So if I did this, marked it right here, and your stop loss is right above the 0. This trade was just about a 2 to 1, you know, not the greatest profit margin, which is fine. You usually want a 3 to 1, but still very profitable. And look what happens here. So now, okay, you got profit take right here. Let's remove this. And then, so now that we've formed this is the new high, right? This is the new high, and this is the new low right here. Look what happens here. If we mark fib, right, just like that, look what happens. So when it made the high, because the high was where you entered at the last trade, and the low was that take profit candle, look what happened. As you could do right here, what is the low of this candle? The low of this candle is 0.83280, and the low of this candle is 83281. So it didn't, you missed take profit by 1 point, and then it reversed against you. That's fine. If you had it right there, this just hit it and then reversed against you. If you had your take profit right there in Forex, you lost this trade. But look what happened. Same scenario, right? It went down, came up, touched the 68, went down, almost touched it, missed it by 1 point, reversed against you. You already won 2 trades that were very highly profitable, so you're not really worried about this trade if you did lose it. But then look what happens. That entry got violated. So what are we looking for now? We're looking for buys because market has now shifted. So now we know that the take profit now became the high or the low, and that stop loss level, which was, this was the first high. As you could see here, we didn't get it. We didn't get the entry. Okay, it didn't come to our entry, so we're not too worried about that one. We removed that, and as we could see, price, this was the new low that created that high. So if we go here and we put the marker right here, look what happens here. You got a nice trade right here. Price came down into the 80 level, went up, take profit. So you have 3 wins, 1 loss. And again, if you're doing OTM strikes, okay, this was at 10:30 New York, so you took this trade, okay, you took an OTM strike. The strike was up here because you're taking an OTM buy strike, and it was up here. Look what happens. Within a couple of hours that already hit, so you got 1 to 3. So technically, if you're risking $10 and making, let's say every contract you're risking $10, right? And let's say you take 10 contracts, so you're risking 100 to make 300. Okay, you're risking 100 to make 300. You've already won 3 times, so you've won $900 and you've lost 100. So you're in profit 800. And this works on every pair. Let's continue it one more time. Look right here, the high, the new low right here. Look what happened. Came down into the 68 level, hit take profit, another 300 right there if you're risking 10 to make 30. Now obviously some of them could be way more, like this one you probably made 40, this other one with the first one we took you probably made 60, but that's irrelevant. What I'm trying to show you is that you're taking OTM strikes with this, okay, and you're making way more than you're losing every time. So now that this is done right here, so we had another one, and then this was a loser right here. Okay, this right here, it did come to the 50 and it came down here. The problem is it hits your stop loss, okay? And guess what? It hit your entry strikes during London, so maybe you didn't even get into it, because when you woke up, New York session, it had already hit your stop loss. You know, so you never even got into this trade. Most of the trades you take will be hit in New York session. So anyway, altogether, if you're risking 1 to make 3, and 10 to make 30, and 100 to make 300, you've won 4 trades, lost 2. Okay? What does that teach you right there? 4 times 3 is 12, so you've made either $12, 120, 1,000, 200, and you've lost 200. There you go. Now, you could go back and do this. Look back on every pair you want. Just go do it, okay? Let me go to Euro USD. See if I can show you right here if we saw one. Let me just refresh this. I want to see if I could show you something, you know, something worth watching. Okay, I see some right here. Like this right here, we have this level here. Oh, I did the wrong one, sorry. Right here, came down, hit take profit, okay? This was during market close, so we're waiting for it to come back in US. Look, came right back down in the US right here. Boom, hit take profit. So even if you missed this right here because it was at market close, you missed this because it was London, look what happened. And this is exactly why I'm telling you that this is what they use to enter trades, because as you could see, it always comes down during the US session. It does come down in London, but it also comes down in US. And then, look, let's see if we hit another trade. So, the new, right there. Look at this. I can't make this up. This is random. I just went on Euro. This is Euro Pound, the same thing we were looking at. But look, this was it right here. Came up, and then it had come up. It always happens. If we go to, let me see EuroCAD. I want to show you guys maybe something else. You know, I just want to show you that it works. Okay, so if we do this right here, this is an active trade right here. It came down a little bit during after London, so maybe it might come down and then hit it, or you know, something, it might do something else. But if we go to Euro USD, I don't see it happening here because this has already been, let's see. Yeah, it didn't come down to the 68 level. Right here, look, I had this drawing already, so I had already prepared this, look, on Euro USD. So I showed you a pair I didn't have to show you. Look, right here, came down, look, US session, look what happens. Same thing right here. Came down to the 80, broke it. So this system, I mean, it's pretty simple. Even if we go back to this setup right here, if you took this longer setup, look, it came down, came up, hit take profit. This just depends on what you're looking at, the macro or micro structure. And this works on everything. And what I want you guys to do is test it out yourself. Rewatch the video if you need to, and ask me questions on Telegram. I'll see you guys in the next video, and thanks for watching.